I've always thought of investing as a sophisticated form of gambling. Let me take you back to when I was a kid, wide-eyed and naive. I received my first lottery ticket. The thrill, the anticipation of what if, it was an unforgettable roller coaster of emotions. This kick-started my journey into the world of finance. Investing at first glance appeared to be gambling, but with fancier terms. Buying low, selling high, bonds, stocks, it all seemed a game of chance. Just like my lottery ticket, I was putting my money on the line, hoping for a favorable outcome. One day, I found myself reminiscing about that very first lottery ticket. I was no longer a naive kid, but an adult who understood the value of a dollar. I thought about the odds, the risks, and realized that, in essence, investing was about playing the odds, much like buying a lottery ticket. The only difference was, in investing, I had more control over the odds. Now, I know what you're thinking. Do you need to be a math genius to understand the stock market? No. Let me tell you a secret. I failed my high school math test. That's right, failed it. But here I am, dabbling in the world of investments, and doing pretty well, I might add. My high school math teacher would probably faint if he knew I was now calculating returns on investments and analyzing market trends. But the truth is, you don't need to be a math whiz to invest. Sure, you need to know the basics, but it's more about understanding trends and making informed decisions. And trust me, if I can do it, so can you. Have you ever thought investing was a luxury reserved only for those with a hefty bank balance? I once believed that too, picturing investors as cigar smoking, champagne sipping high rollers, cruising in their private yachts. But as it turns out, investing is not an exclusive club for the rich. It's a financial strategy that anyone can and should adopt. A curious question that crossed my mind was whether I could invest in the things I love. Like my favorite pizza place, for instance. Their delicious, cheesy slices have had me hooked from the first bite, and I wondered if it was possible to own a piece of that pie, in a financial sense. To my surprise, investing in your favorite pizza joint is not as far-fetched as it sounds. Businesses, big or small, often rely on investments to grow and expand. So while my pizza obsession might not have led me to a career in culinary arts, it did open up an avenue of investment opportunity. Now, let's address the elephant in the room. Is it too late to start investing in your 30s? I remember waking up on my 30th birthday, half expecting to find a rule book that said, no investing allowed beyond this point. Thankfully, no such rule exists in the investing world. In reality, it's never too late to start investing, regardless of whether you're in your 30s, 40s, or even 50s. Your investment journey timeline is not bound by your age, but by your financial goals and risk tolerance. So remember, it's not about the right age, but the right mindset. Many people think that if you didn't start investing in your 20s, you've missed the boat. I used to believe this too, until I realized that I still can't remember to pick up my laundry, let alone manage a portfolio. Age is just a number and investing is not bound by it. The fear of losing everything in a market crash can be paralyzing. Imagine it like this. You're on a roller coaster, and even though it's scary, you know it's just a thrill ride. That's how market crashes are. Scary, but not the end of the world. Then there's the common misconception that investing is only about stocks and bonds. I remember when I thought that investing meant buying a piece of a company, like owning a slice of my favorite pizza shop. But investing is so much more diverse. Bonds, mutual funds, real estate. There's an entire menu of investment options out there. It's like walking into an all-you-can-eat buffet when you've only ever experienced fast food. It can be overwhelming, but also incredibly exciting and rewarding. We often seek shortcuts in life, especially when something seems complicated. I used to daydream about finding a cheat sheet for investing, like those math formulas I scribbled on my hand in high school. But investing requires patience and learning, not cheats. In my early investing days, I was on a relentless quest for shortcuts. a cheat sheet to investing riches, if you will. My Google search history was filled with desperate pleas, easy ways to invest, stock market hacks, and my personal favorite, how to get rich without really trying. Unsurprisingly, the internet was less than helpful. Simultaneously, I was grappling with another dilemma, the constant barrage of market updates. Was it necessary to keep one eye on CNN and the other on my portfolio at all times? I've always had a distaste for the news, too much doom and gloom for my liking. I worried if my aversion to news could sabotage my investing dreams. But then, I remembered that just like my pizza obsession didn't dictate my investment choices, neither would my dislike for the news. The stock market doesn't require constant monitoring. I relaxed, deciding to opt for periodic check-ins rather than non-stop surveillance. The next question that popped in my mind was the classic overnight success query. Would investing turn me into an instant millionaire? I had visions of waking up, checking my portfolio, and gasping as I saw the seven-figure balance. It was a dreamy, comical fantasy, fueled by too many Hollywood movies. Reality, of course, is quite different. Investing is not a lottery ticket or a magic wand. It's a journey, often slow and steady, with its fair share of highs and lows. But the thought of becoming a millionaire overnight, it sure makes for an entertaining daydream. In a world where instant gratification is king, it's easy to get caught up in the fantasy of becoming an overnight millionaire through investing. It's as tempting as imagining a winning lottery ticket, just waiting for your numbers to be called. But the reality of investing is often less glamorous. It is a slow and steady process that takes time, patience, and a dash of bravery. Investing is often seen as a daunting realm of numbers and statistics, a maze only navigable by math geniuses. But don't let that scare you away. The truth is, while some understanding of numbers can be beneficial, you don't need to be a math whiz to be successful. Financial literacy is more about understanding concepts, not complex calculations. A common misconception is that investing is a rich man's game, a luxury only available to those with deep pockets. But that couldn't be further from the truth. Investing is not just for the wealthy. With the advent of robo-advisors and low-cost index funds, almost anyone can start investing with as little as a few dollars. Many people often hesitate to start investing, thinking they've missed the boat. They see their 30s, 40s, or even 50s as too late to jump into the investment pool. But the truth is, it's never too late to start investing. The perfect time to start is now, and the second best time was yesterday. A common fear among new investors is the possibility of losing everything in a market crash. It's a fear as gripping as standing at the edge of a cliff, looking into the abyss. But it's essential to understand that market crashes are part of the investing cycle. It doesn't mean you lose everything. Instead, it's an opportunity to buy more shares at discounted prices. Market crashes are not the end of the world, contrary to what my roller coaster phobia led me to believe. Just like the wild ride of a coaster, markets also have their ups and downs. The key is not to panic during the lows and hold on tight, knowing that the market will eventually go up again. Investing isn't only about stocks and bonds, much to my surprise. During my early days, I assumed that was all there was to it. Then I discovered real estate, mutual funds, ETFs, even investing in startups. It was like walking into a pizza shop and realizing there's more than just margarita. Investing doesn't require constant news monitoring. Sure, it's important to stay informed, but you don't have to keep your eyes glued to the ticker tape. There's life beyond the market updates, and it's okay to enjoy a sunny day without worrying about what the Dow Jones is up to. In the end, I realized that investing is for everyone. It's not an exclusive club for the rich or math geniuses. It's a skill that can be learned, and doors are open for anyone willing to step in and take charge of their financial future. So here I am, your average Joe, navigating the investment waters. I've learned that it's never too late to start, that a market crash won't wipe me out, and that there's more to investing than just stocks and bonds. And yes, I'm still hoping to wake up as a millionaire one day. But until then, I'll keep learning, investing, and of course, enjoying my pizza.